Hi folks, Rick Wedell here. I'm the Chief Investment Officer at RFG Advisory. Thought we would come to you today with a brief market update, kind of let you know what's going on out there, particularly given some of the international developments over the weekend. So first, let's start with a little bit of a market recap. The S&P 500 is right at about 6,000 right now. That is up slightly on the day. Bonds also rallying a little bit. The 10-year yield down to about 4.3%. That's down maybe 6 basis points, so 0.06 That means that the Barclays Agg, which is what we sort of measure bond performance by, is actually up by about 30 basis points on the day. And if I really just want to go through, overall markets, I feel like we're kind of midway through the year, so maybe a little bit of a check-in of where everybody is. And the S&P 500 is up about 3% year to date, rough numbers. The Barclays Agg is up about almost the same, about 2.9% year to date. Small mid caps, so the Russell 2000 is down about 5% year to date, minus about 4.9%. And international stocks outside of the United States. So all stocks, excluding whatever is here domestically, those are up about 13% year to date. So once again, a market where the first market in a while, where diversification has really been your friend. Holding stuff that's not just the S&P 500 has actually worked out well for most folks this year. There's also another asset out there that I just want to touch briefly on the price of, and that is crude oil. So crude oil right now at about $73 a barrel. That is actually down a little bit today, believe it or not. I frequently told people that sometimes uncertainty is actually worse than certainty. And this notion of, are we going to go to war or not? Or are we going to involve ourselves in the conflict or not? Sometimes is actually worse than for commodities prices than the actual knowledge of what you were doing. And I would actually just point out there is some historical parallel here. If you go back to 1991, when Iraq invaded Kuwait, oil prices roughly doubled for a long period of time. Until the U.S. actually started the air campaign against Iraq. And when that happened, oil prices actually fell pretty substantially and stayed at a lower level for a long period of time. Because once again, sometimes the uncertainty of not knowing what's going to happen is worse for people than actually what happens. The other thing that I would just note about oil prices is, yes, we have rallied from kind of the low 60s to kind of $73 a barrel most recently. But that's not even the high for the year. If you go back to early January, we were in kind of the $76 a barrel range, so actually north of where we are today. And really, if you look at the history of oil prices, you go back to from 2022 all the way through the beginning of 2025, we were kind of at that $70 or higher per barrel price point. So that's not to say that we haven't seen a rally in oil prices. We have, but it is to say that we might be kind of used to some of these higher oil prices. So not quite the shock to the consumer that, if we saw oil move to $100 or $120 a barrel, that they would feel. Yes, we've had maybe a month or two of lower gas prices at the pump, but it's not something that the consumer is going to be like, oh my gosh, I've never seen $3 gasoline before. The other thing that I would just note about how oil prices impact the overall U.S. economy is it's kind of a wash. It's one of these things, if I looked at you and said, hey, how do you think Saudi Arabia reacts to much higher oil prices? And everybody would say well, they're a huge oil exporter, and so high oil prices are actually really good for them. They make more money when oil prices are high. And this is the point where I like to remind people, well, actually, the United States is a net exporter of petroleum. And so it's not by much, I grant you that. But even if you go back to 2015 and 2016, when we saw this sort of massive oil price expansion driven by OPEC, it didn't actually push the United States economy into a recession. What tends to happen is a much more regional thing. I like to say that people in California and New York get very, very sad because they don't create that much in the way of net petroleum exports. But people in Texas and Oklahoma get very, very, very happy because they see much higher oil prices and get a lot more revenue, and drilling activity expands, et cetera, particularly if those oil prices stay in place for a long time. And so the net impact on the US economy is unclear. Seen a couple of news articles that say, but yeah, this is going to make it, harder for the Fed to fight inflation because, or harder for them to lower interest rates. And that's really somewhat of a naive point of view, because I would just remind everyone that the Fed does not look at food and energy prices when they think about inflation. They tend to look at core inflation, specifically because food and oil prices tend to bounce around a whole lot. So net, if you think about the activities over the course of the weekend, the U.S. Getting itself involved, so long as this once again maintains a sort of a regional conflict nature, and so long as nobody does anything crazy to drive the price of oil higher, then this is an event that the market will, and it appears to be, somewhat shrugging off as a regional conflict. And that's not unexpected. And I would note that there is going to be a lot of tension around this. Certainly, tensions are high right now. But I think you can look at the market's reaction and say that, it's certainly at this point, rational heads would call for, this to remain sort of a regional conflict. Nobody wants to shut down the Strait of Hormuz. Not even Iran really wants to do that, since the lifeblood of their economy flows through that particular waterway. And so most people look at it from sort of a game theory, rational actor perspective and say, hey, this is likely to remain a regional conflict. With that, as always, if you have any questions, please feel free to reach out to myself or to your advisor. I hope you're having a great day, and I look forward to talking to you again soon.